far as efficiency goes, hopefully today is going to be better than that. So I'd like to kind of bank on that, but also not get ridiculously aggressive, kind of set my levels. Just kind of thought about this more for daily profit play. I've been harping on the just kind of the structure, which is okay. If I'm going to do a 5 wide spread, I'd like $1 minimum credit. Okay, if I do a 10 wide spread, I'd like a $2 minimum credit. And if I do a 15 wide spread, I'd want a $3 minimum credit. Okay. So in increasing my, if I wanted to increase my dollar amount as far as my profit potential every day, yes, it's going to increase my risk slightly, but this keeps the percentages about the same, right? So if you can risk 4 to make 1, stick with 5 wide. If you're comfortable risking 8 to make 2, you can go 10 wide. If you're comfortable risking 12 to make 3, you can go 15 wide. Because the most important thing with daily profit play is that we set our sell strikes at the levels that we want. Okay, so going wider, I mean, that's fine. It's just, but going wider and still setting the credit the way we want it. That way our reward to risk is about the same. That way our makeup trades is about the same. If I were to do this and take a full loss, I'd be losing 12. Okay, it's going to take me 4 trades. 4 trades. If I stick with this credit, it would take me 4 trades to make it up. So the nice part is we can do that in a week, right? We're active in a week. We have a good week. We can make that up. So we just keep trading. Okay. So that's pretty solid. We'll look at our numbers today. I am curious. So today I'm gonna have a little bit of fun here, because if the market, with this like crazy inefficiency yesterday, wide volatility today, I'm gonna see if the market can still finish within the expected move. Larry says I missed 3 out of 8 days. Well, we're going Friday, right? Friday was, let me kind of chalk this up here. Friday was a miss. So we have, let me just kind of note this. Let me bring up my drawing tool. Epic pen. There it is. Live session with Lance. He seems to think the market may be selling off for Monday's holiday. I mean, it's possible. I mean, I thought this was going to be, I mean, look, there's no real technical damage right now. Not yet. This is still the same sideways 11, 12 week market that we've seen. This goes back to, this is early January. I mean, this was December. I mean, we have not really gone very far. So if we breach, this low from January, breach this low from February, breach this low from December, I mean, the market's certainly pressuring the downside, right? It's pressuring the downside, but we will see, because like the sell-off this week that really was done in one day, it's like the structure was kind of created on Wednesday. Wednesday ended up finishing like flat for the day, but the follow through that it had on Thursday, there's certainly more, testing to this downside. These lows are around 67.80 or so. We have another gap fill back here, which I don't want to forget. We have this gap fill around 6,800. We have a gap here back around 67.60 and all the way down to 67.20. Those are pretty important levels. So could the market be selling off as we head into that window? Sure. I mean, unless we have a aggressive bounce like that again, this market could be gunning for this. Once this floor breaks, I think the market is going to have a harder time saving itself versus just letting it flush. I said, how long have I said 6,500, 6,550 this year? I've been mindful of that area the entire year. Okay. And if we break below that, we've got 6,200 down to 6,000, right? So look, it's a weakness window, February, March, April, it could happen. Day to day, it's not going to happen in a straight line. Day to day, it's going to happen, should be mostly efficient. But it looks like we are going to have to play some defense here. So my goal today is, let's crunch the numbers. Let's go to, I was looking at a play on GLD. I'm probably going to do this. So if I go out to January 2028, so it's almost 2 years out. If I just add an at the money covered call, I can get about a 16 to 17% discount on my current shares. Now, to me, that's not bad to let something kind of be guaranteed profit in case there's a bit of a prolonged drawdown in gold. Although I don't think that's going to be the case. I think gold just gets this flush over with, we have, better upside opportunities. I'm probably going to look to get synthetically long gold if we hit that 200-day moving average, but that's neither here nor there. So let's talk SPX. SPX on this chart as well is sitting at, so we bounced last week off the 100-day moving average. So we could come back and retest it again today as well, right? If we have a little bit more downside, 6750 gamma is right over here. So 68, 67, 75, 6750. Like I said, if I'm going to be selling some premium today, here's going to be my plan. I would like to, look at the expected move and maybe set up. If I did a 5 wide at about a 25 delta, and I set it in for a $2.50 to $3 credit, I'll see if I can do that. And either I do that for today or I do that for Tuesday. I want to see kind of where the expected move is for today to Tuesday. Because obviously if I go to Tuesday, I get a little bit more forgiveness. And if we have a lot of direction today, I can maybe get filled the level I want and then see if Tuesday is an efficient day. But having back-to-back inefficiencies is very rare. So Larry, I want to go back to your point on, of the last, you said 3 of the last 8 days. Let me bring up this opening bell marker here. Okay, so let's go back and see how many days were inefficient. At a quick glance, this volatility, but efficient. This would have been the 3rd. That was a Tuesday. That was after the holidays, right? Nope, I thought we had MLK Day in here. This was, so I would say we have a couple, but let's go back. So it looks like this day, probably inefficient and then efficient. This is efficient. This is inefficient. Efficient, 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 inefficient. So 1, 2, 3, 1, 2, 3, 4, 5, 6, 7. That's exactly what Larry just did. And then here, so it's saying 3 of 8, but we go to this day. This was efficient. This is efficient. This is efficient. So to say 3 of 8 makes it seem like, oh my gosh, they're not doing their job. But to say 3 times out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 3 days out of 11, we had inefficiency, efficiency. So you had 8 winning days there. Now, typically with the reward to risk, that's not necessarily enough to get way further ahead. It's just been a bit of a grind, man. That's all it is. So, we play the game, right? We play the game. Don't ever tell me. I wasn't doubting you. I just remember, go back though, 3 out of 8, yes, but we also just look at all these other days. It's like there's plenty of efficiencies that will make that 3. Yes, 3 stand out, but we probably had closer to 11, 12, 15 efficient days to the 3 inefficient. Okay. So, I'm curious on the current day, whether we can bounce back with an efficiency day today. If we test these gamma levels, I'm hoping that we can bounce back above them. Let's check and see what the SPX shows for today's pre-market. So we're showing pre-market 63.3. That's pretty big. Going into Tuesday, it's 95 points. I'm gonna look at a couple of trades today. Weekend wise, yes, there could be some gaps and whatnot, but I think what I'll do is I will look at today. When we open up, I'm going to go right around a 20 delta. And so if I did let's go bear call. So if I did a bear call right around the expected move, like so, if this trade offers me 250 or better, I'm going to take this trade. And I'll take this for today and I'll take this for Monday. On the put side, you can see here that this is a 18 delta. 6750 could be tested. That's around the 15 delta. So hopefully for the day, that's pretty safe. And I mean, again, if I'm going 15 wide, I'm hoping to get $3. If I go 5 wide, I want at least $1. This isn't a bad trade. Not a bad trade. So, but this is for today's 0DT plus or minus 63. Now I'm hoping that given the inefficiency yesterday that market makers are trying to restore a win by having the expected move be a little bit higher, and the market turns out to do much, much less today than what is potentially forecasted. Okay. Markets open in the afternoon on Monday. No, I think they're closed. It's President's Day, so I'm pretty sure it's a bank holiday. Sunday. Here's Monday. We should have zero data. Yeah, there's no US data here. I've got Bowman's speech. It doesn't show up as a holiday on the calendar here. So today, what was the big news this morning? Here's all your CPI data. We had year over year forecasted 2.7, came in 2.4, or that was the previous. Sorry, is this previous? Yeah. So we had the previous 2.7 came in 2.4. That's the headline inflation reading. So that's pretty good improvement. And then the core year over year was 2.6 previous, came in 2.5. So a decent actual, an encouraging sign that inflation is going down and retreating a little bit. Again, this is way off compared to the dramatic drop we've seen in something like Trueflation. But still, nevertheless, at least it's, we had a bump in labor this week, which was better than not. I mean, they came in 130,000 jobs. They're expecting 66. So that's at least a bump. And then inflation is showing that it's improving. So we'll see if that trend continues. But is it enough to, keep this market stuck in this like little 3% correction range? Or is it going to just roll over harder? I don't know. We'll find out. So a couple things for today. Whatever I'm selling today, I want to make sure that my puts are below 67.50 unless I'm getting a premium that I'm happy with. So if I go expected move, okay, so on my broker platform, it has the expected move. If I sell a call spread and I sell a put spread, and this is actual price, if I'm going to go $5 wide, I want $2.50. Okay. If I wanted to, I actually almost would consider going to $3 because that way it makes my reward slightly greater than my risk. Okay. So we'll kind of see where that stacks up for like a trade today or a trade on Tuesday, because there is no expirations on Monday because of the President's Day holiday. Okay. So I think mechanically today, I'll probably go 15 delta. And I'm going to try to stack in a couple of trades. I'm looking at this as an opportunity where inefficiency yesterday is hopefully followed by efficiency today. Even with the market going down, if we go down and then roll back up here, go down and use this gamma as support, finish within the plus minus 63 points today. So we're going to have a tiny little gap lower at 0.03% in futures. Let's go down 63 points. I'll just round it to 64. Okay, I'll round it to 64. So 68.32, 6832 minus 64. So if we have an efficiency day today, we'll be at 68,868. 68,868. Let me put a line here. 68. That's not right. 6832 minus 64. Okay, sorry, 6768. So 6768 should be our market maker lows as far as where price can close. And because we have such a tiny little sliver, I mean, we're going to be opening slightly lower. So I'll take the close here and go up around 60. Wow, that's like nothing. This needs to be 67, 68. Okay, so there's 67, 68. And then this should be up into the 90s. Should be about 90. Actually, no, it should be 6,900. So there's my 60. All right. So right about there in blue should be our market maker efficiency. Why did I get 68? 64. Jeez, oh Pete, dude, do the math. All right, sorry. I had to change this. So 6832 minus 64, 67, 68. Okay. And then this will be at 96. There. Okay. So if we have an efficiency day, we should see price closing above the blue line and closing below this blue line. That's our range for the day. Now, with daily profit play, the goal is, let's have our legs be slightly higher than this, so we just increase that probability. Obviously, if price is going to go down a little bit, that down volatility or up volatility, we still get the credits that hopefully we want. So that's what I'll look at. Let's see. Gloria says, would this $2.50 to $3 trade involve closing the same day? Yeah, I mean, if it's daily profit play, it's a 0 DT, yes. So if you don't want to, I mean, remember, if you do take the trade today and you let it expire and you don't close it, then it doesn't count as a day trade, right? If you let it go to expiration, it doesn't count as a day trade. Okay. All right. So we've got opening bell here in about 8 minutes. Do you think you'll do? I'm going to look at, because of yesterday's sell-off, I'm going to look at an iron condor today. So what I'll probably end up doing is either 10 wide or 15 wide. And I want to get my strikes, out of the way, right? Like if this is going to be, the expected move's probably going to be something around like a 20 delta, 25 delta. So if I start at 17 or 15 or 12 or 10 and just put in the credits that I want, I don't mind stacking in some trades that way. And hopefully the markets will maintain some efficiency. Okay. Tracker updated. I mean, it should be updated. I mean, I was gone on Monday, Tuesday. Blake ran the session Wednesday. Those weren't my official trades on Wednesday. I know you guys won on Monday. I'm sorry, Wednesday with Blake. Yesterday I didn't have a trade filled. So I'll double check the tracker for daily profit play. Also, I've been, working on my laptop, and it's like I'm not even going to be back in my office until like later today. So I've got some catching up to do. It might take me over the weekend to do it, but I'll be back in normal, next week with everything back down on my typical workstation. So 6896, 6768. Now again, I don't want to be super aggressive at these levels. Okay, I still want to respect that. Ideally, I'd like to be selling above, 69.10, or I want to see how high we can go to maybe 69.20, and certainly to the downside, it's like 75 or 50, 67, 75, 67, 50. I mean, that would be another inefficient day if that's what happens, right? If we come down here, I mean, that's moving 82 points, right? So could we line it up? Well, maybe. I mean, if the VIX is going to run higher, where's my pinch? VIX is hanging out at like 20.97. So I'll set a chart alarm. I'll move this one up here and see if we break these reasonable highs. This is just kind of intraday highs we saw. So we peaked yesterday around 22. We've been sliding a little bit lower this morning, but we're looking at a VIX, 21.96 VIX. Divided by 16. So like a 1.37, that could be, I mean, if the VIX stays here or lower, like 1.37 is about the max move on the day. Okay. So if we go, we're going to have a slight gap lower, but not by much. I'd say the extreme low right now is going to be around, I feel pretty confident with like a 67.35. 67.35, and that's a VIX. So that's a low, and then VIX would be 20. What was that VIX high? 21.96. And then we'll have close here going up about 1.37. So we can say 69.30. I mean, it's 69.26, but 30 seems safe if you're selling. So 6936, 6930, fix 2196. Okay, make sure that is correct. So 1.37. Yeah, so 26, we rounded to 30. That should be about our extreme high and low of the day. Now, again, the low could be in question if the VIX continues to go higher. If the VIX breaks 21 and goes to 23, 24, you've got to adjust that bottom target. Okay. Sold the 6845, 6849. I'm not sure how you got those strikes there, Rob. I mean, how do you get a 49 strike on an SPX trade? But I mean, look, I keep telling you in daily profit, like yesterday is one of those days where there's not much you can do. The only way to defend that trade yesterday was having a butterfly below your put strikes, and it's difficult to win the whole day, but you can offset some of the risk. I mean, I put on a couple of butterflies yesterday, and it wasn't a great trade. Like I still won like $200, and at the end of the day, it would have paid me about 900. I didn't think we'd be crashing to fresh lows at the end of the day, but we did. And this is your 3 o'clock like end of the day flush. So anyway, I had some profit in here. It was like my max risk was maybe like $300, and I was up 200. I'm like, no, I'll take it. But it was just a trader. I'm like, I don't know if it's going to work. I took a stab at it. I got some profit, but I was, look, everything I did yesterday was trying to sell. I wanted to sell calls only because I didn't like this impulsive move. Thought we'd have some follow through, and we did, and it went, 3 times bigger than the expected move. So on those days, it's like it's difficult to do anything other than if you play some defense, you're washing some of the risk. That's probably the best you can do. It's hard to get it all back in one trade, but if you can reduce the risk, you can recover faster. Okay. But like I said, if you're strict on the credits that you take in, if I'm going 5 wide pulling in $1, if I go 10 wide taking in $2, if I go 15 wide taking in $3, those trades, we need 4 winners to get back. That's a lot better than people thinking like you need 10 winners. You don't. You need 4, right? But you have to set the credit first. You can't accept that, well, if I took the trade right now in a minute, it's like, well, the broker says it's going to give me on a 10 wide, it's going to give me $1.50. We've taken a lot of trades at $1.50. We've taken trades at $1.30. I just know this is going to take a 5th win to do that. So if I'm strict on the credits, then I know that I just have to have some wins and we'll get it back. Okay. All right. So we're going to open up here in just a minute. I'm going to do a couple of things here. So for today, I'm probably going to layer in, I might layer in the 15 wides and see if I can set them up for like $3. I don't mind taking on the risk today. We're going to have a slight gap lower. ES is basically flat. So we're kind of opening right where we closed yesterday. Let's have a look at things. I'm going to go. So 15. So if I go, let's say 11 delta, 15 wide. It's only offering $1.20 right now. Let me try to go. So that's 11 delta. Let's match that delta here. And 20. So 255. Let me see if I can grab this trade. I don't mind $3. I'm going to go 260 on this one, see if this will fill. 265, 260. I just got filled at 260. That trade's coming in. Let me grab my phone. So I'll shout it out real quick before I go. I'm going to grab my phone so I can type it in Telegram. I'm doing a 15 wide, 69.10 by 25. 69.10 by 69.25 bull bear call. That's the call side. I'll repeat it. 69.10, 69.25. Put side 67.35, 67.20. Now I'll do one more 25 by 10. And that's a spread. That's 10 points different. I'll do the 20 by 35 and see if this one will fill for, I'm going to try this one at $3. So that way I'll set the credit where I want it. That's a slightly lower delta as well, but we're talking like 10 deltas for all these trades. Okay, I'll get it in Telegram and grab my phone. 1 sec. That little cherub in there is sleeping his little face off. All right, coming in Telegram. Daily profit play. New trades. Today is the 13th. So a 6, 9, 10. 6925. If you don't want to go 15 wide, don't go 15 wide. If you want to go 10 wide, look for $2. You want to go 5 wide, look for $1. Okay, I'm going to go 15 wide. I'm going to look at that efficiency. 6735. 720. That was filled at 260 credit. And pending order is 20 and 35. And 6725. 10. Going for $3 on that one. Okay, trades and Telegram. Okay, so we'll keep an eye on that today. And then for Tuesday, because of the holidays, because of kind of the wild and crazy moves this week, I'm going to see, right now, if we moved a little bit off the barely moved. Let's see how I'm looking at the expected move here. So if I do, I'll go 19 delta and I'll match that. 19 delta. Will this trade fill for $3 credit? This is a Tuesday expiration, by the way. Okay. So I'm going to try this one. It's about a 19 delta. I'm going to try to get $3. So I'm risking 2 to make 3 on this trade here. And that's baking in some efficiencies for, hopefully Tuesday, I suppose. Let's see. Maybe the better trade is to do I'll go 16 delta. This one might not fill, but I'm just going to play it a little bit more forgiving. Okay, so 16 delta, 14 delta. See if this will fill for $3. Okay, this one's good until Tuesday when we come into trading on Tuesday. So for today, okay, here's the DPP for today. There's the fill at 260. Um, if I'm up 130, if I'm up like 50%, I might take it. But we are, below the 6750, which is good. And we'll see if there's any volatility for maybe that second one to get filled. Defense wise, I'm gonna look at a couple defense trades. Are going to be broken wings. So go for the 13th. So I could sprinkle in a defense trade. If I did 5, 15, and 30, I could sprinkle in a defense trade. Break even would be 26. Try to get $1 credit to risking 4 to make 1 with $1,000 profit trap. And down here, if I were to buy, sell, and buy, $1 credit. Okay, so some defense on a broken wing butterfly, defense on a broken wing butterfly. Those may not fill unless price gets tested one way or the other. So if we have some, pressure to the downside here, coming in to fill this gap, find some support around 6780, 6800 zone. One trade I also wouldn't be offended by would be maybe looking at a 6850. Hear me on this one here. If I do a 6850, by 6750. So this is 100 wide, right? 6850 by 6750. If this thing could get filled today for a, I don't know, $98 credit, would anybody be mad to risk $200 to make $9,800? I wouldn't, right? So basically the way I set that trade up is if we were to come down here and find this level, I'm trying to get filled for as much credit as possible. And if it bounces up there, every credit above my break even is $100. So if I got filled at 98 and we bounce off of 6750 and go all the way back to like 6800, I'd make $5,000 on that trade. I'm risking $200. Now to get filled on the trade, it's timing and how far price is. If it shoots below our levels, this mouse is, no, the mouse pad is really the problem. My mouse pad is a Dr. Seuss book. So anyway, let's see. Let me see if I can pull up some gamma today. I mean, there's 60, 50 real-time gamma. What was pre-market today? 69 and 67.60. So, I mean, I'd kind of like that trade a lot, actually. Do we get a little extra premium if I did a 69.50? 69. All right, so it'd be 200 wide. So 69.50, 67.50 is 200 wide. If I get filled for $198 credit, I'm risking $200 to make $19,000. Now, all it is everything above 67.52 would be profit. So if that happens to get filled today, I think there's a lot of upside potential. Could I risk it and not get anything? Sure, but I'm going to put that trade in. Kind of one of those like wishful thinking trades where there's a lot of profit potential. Okay. All right. Let me throw in some defense trades in Telegram. And then I'm thinking I'm probably set for the day. Market's looking a little bit directional. That's fine. That's to be expected. Here are gamma levels. Remember, here are the efficiency zones. So our blue line is the market maker efficiency. We'll see if they do the job today. XSP, we're getting. We had another engineered option trade filled. That was the 84. 84, 83. All right, man. We got some lines in the friggin' sand, that's for sure. And that expiration is on Tuesday. Engineered options. VIX is crossing highs. So 6. Say 4. Okay, filled. If we are still lower on Tuesday morning with defense trades, I mean, we know what those trades are, right? So all I really need to have happen, Curtis, is if price is above 684 by Tuesday, I'm still going to make money in engineered options. I can lose my participation trade. I can lose my break-even trade. I can win my defense trade. I make money. What's worst case is I lose them. I lose because the market didn't stop going down. Like that's a risk we accept going into the day. That's a risk we accept going into the week. But if the market gets a bounce at all, I think there's a creature stirring. If the market gets a bounce at all, we just need the bounce to be above 684. If the bounce is above 684, I can still make money. So that's why we put defense trades in. That makes sense? So, and again, like now that we're in them, then let's see what happens on Tuesday. Because my thoughts would be that it's moved enough and moved fast enough that we have at least a response to get above 684. Maybe the market finishes down for the week, but we stay above our 684 defense, which is all we need to get a net winner. And that's fine. I mean, if we lose 2, win 1, and we make money for the week, I'm totally happy. I mean, obviously, ideal would be we never lose a trade, but that's not going to happen. Mike says, got signed at 45 on IBIT, 1060 Lord. Yep, there you go. Yeah, December. That's good, man. Yeah, December, January. I mean, that's what I'm saying. Just if you go out there, get 13, 15% on Bitcoin. I'm looking at a trade. So I thought about GLD, right? GLD, I think we're still going to come down to the moving averages. This is the 200-day moving averages. But you can go out 1 year and get about a 10 to 11% premium on gold. You can go out 2 years, you get about a 17% premium on gold. Now I'm capping the upside. I do think gold, works its way higher. So my thoughts are of all of my positions I'm going to have on gold, I'm probably going to cover about half of it and then let the other half run. But my goal is to lower the cost as much as I can. So, all right, let's see what happens for the remainder of the day. Where is our low at? Oh, look at that. That market responded. I mean, that low right there, that market responded almost perfectly to that gap fill from Thursday to Friday. So we test that level, working our way back up. And now let's see what the market does for the day. Okay, so our SPX. I'm gonna add this in for engineered options really quickly. Did we get filled on our 15 wide or no? Working order. No. I wonder, did anybody see what this is trading for that pending order? I put it in for $3. I feel like that wick would have maybe been close to getting filled, but three's what I wanted at. I just wasn't sure if it was like, 250, 260. I just, three's fine. All right. A couple working orders. All right. So I'll just make a little comment here for engineered options. So participation level, break even level, and defense. These are all filled. All we need is XSP to be greater than 684 by Tuesday. We still make money. If the rally or comeback is larger, we can win defense plus break-even level, bigger profits. Okay, that's an engineering options. Randy says 69.10, 67.35, 5 wide fill for $1. Okay, good. I'll do that in the core strategy video there, Rob. I said yesterday I'm going to do some core strategy videos for hopefully today and this weekend. I'll be all my primary classes. So daily prop play, waterfall income, engineered options. We trade those on the regular. And, I just had the feedback this last week where, so many master classes, if you can't attend, you don't want to watch a 60, 90-minute session. Part of me is like, well, why do I do master classes? But to do 10 to 15-minute videos where it's like, now you have no excuses. You have no excuses to not know the core strategy videos, right? So I'll finish this up this weekend, but I'll put a video on daily prop play on how we defend as well if you're interested in defending. Larry says just went a little bit riskier, 50 by 40 for $1.10. Okay, you're banking on that 67.50 zone. Yeah, I mean, so far so good. So far so good. What was that low, by the way? That wick low was 67.90. It's funny because that was the trade that I wanted yesterday. I posted that in Telegram. It's what I wanted it to be. So who remembers? It didn't get filled, but I was doing like sell the 7,000s and buy the like 67.90. So that's however many points wide. I was going to risk like $100 to $200 to have it be like all profit. I mean, it didn't fill yesterday, so it's not in there. But look, the day is not done. There's still plenty of drama ahead. Market's going, up and down. Just it's going to be volatile. Look, the VIX is spiking higher. I mean, we could be watching a VIX do this today too. If the VIX does this all day, up and then down and up and then down and up and then down, like it's not going to be a fun day. It's going to be a challenging day. Now, the good thing is, as long as the day can close in between our blue lines, that's all we need, right? I mean, again, what I'm measuring here is I'm measuring market maker or expected move efficiency. As long as we stay inside these blue lines, we're getting paid. Okay, but it's gonna be a choppy session. More than likely, like these swings, like the VIX at 20 is a lot. I mean, we spiked up here. That's a high of about 22.43, 22.43. I mean, the market's given us potentially like a 1.4% swing. That's a lot. So we started out the day. Is this how we started? Oh my God, it's only been 21 minutes. Good Lord. Wow. Okay, so if we go 1.4%, so now we're talking a low around 67. It's still about the same low. So we're starting here, 1.4%. I mean, it really hasn't changed too much. So, I mean, this high and low is still accurate. Price is pretty crazy. But look, this is the type of day where because of the expected move and the implied volatility was such a nasty day yesterday, how do market makers make their money back? They have to do this. So yesterday, remember, the actual move was greater than the expected move, right? So how do they make their money back today? Today, they do everything they can to make the expected move greater than the actual. Type in a wire yes in the chat if that makes sense. Right? This was yesterday. So for them to recover, and this is what we typically see, it's very difficult to let the market go inefficient multiple days in a row. That puts a lot of stress on market makers. That puts a lot of stress on the liquidity providers for the market. So when this does happen, usually the result is shortly after we have the expected is way bigger than the actual. Okay, and that's where they get all their profits back. So if they rolled any risk over, they get it back by washing it the next day. Okay. Yep. So move it big, cause chaos, make the spread exactly right. Exactly right. So, if market makers are surviving in here all day, where they're just selling tons of premium around the 68.95, tons of premium around 67, 66, they're going to try to keep prices contained, and they will clean up from that, inefficiency yesterday, their rolled risk, and hopefully they will, keep things in check. So, for getting filled at 260 on the 15 wide today, I'm not going to be super greedy, but if I'm up over 200 bucks on the trade, I'm just going to take it. Okay. I'll just take it. So on that note, let me go into SPX here, daily profit play, still upside down a couple of bucks. I'm going to set a take profit at, let's go, we'll go 50 cents. It gives me 210 on the day. Okay. And our levels, we have so blue lines represent our expected move. I'll put green lines for us. I need to see price 69.10, 67.35, 69.10. And 67.25, 35. There. So change that to green. Change that to green. There. So we get paid inside the green levels, efficiency day inside the blue levels. If that's the day, we're good. Okay. VIX, high around 22. I'm going to set a chart along here to see if the VIX retreats. It may be sub 20. Just to get a feel for it today versus like adjusting the lows, adjusting the lows, adjusting the lows. Just get a feel for it. Any gamma to take a look at here? I mean, pretty open space. Yeah. I mean, honestly, I think the market's just going to chop around. What's the profit target for daily profit? No, I'm going bigger profit target. Here's why. I think we have a good day where the expected move is going to be greater than the actual, and so I'm going to try to pull in as much of that premium as I can. So if my 260 credit is trading for 60 cents, 50 cents, 40 cents, I'm pretty happy with that as a daily profit for today. So I'm just going to let price do its thing. Larry, I'll keep an eye on that 67.50 for you as well. Looking left on this chart, this low, by the way, was around 67.32. Just in case we overshoot, if we overshoot the 67.50, which is a pretty large gamma level, if we overshoot that a little bit, I obviously want to see it close back above 67.50. So, hopefully by just price action today, if you're watching this stuff, we really shouldn't see price closing below 67, 68 today. But could it go and test it? Sure. We could test that blue line. We could bounce off 67.50 and then go back up for the day. So one thing I might look at for the day would be if I can get a decent fill, something where it's like low risk at like the 67.50 or 67.40. What makes it challenging today? If the VIX keeps crossing highs, then it's going to be tough to call that bottom right away. But I think we're just going to look. We're already above 20. There's a lot of VIX here. Above 20 is a lot. So right now I'm going to take advantage of another project options edge. I'm going to sell some more premium. Let me see if I can get something on IWM. IWM that with the ETF is a little bit cheaper. Sell back down here towards 170. Let's see what that looks like on a ratio spread. All right, if I went out to Jan, 170. Right now that's offering a decent premium. If I go 180, 170, not a bad income trade for margin accounts, another 190 bucks. If I go 180, 170, 150, 120, 110. Yeah, I'll do this. I'm going to do this for margin accounts. I'll just make it like a ratio spread. IRA accounts, I'm going to go wider here. So I'd still own the shares at 160 and change, but I will, I'll define the risk where I'm going 60 wide so I can still pull in 100 and some dollars on the income side. All right, so let me get rid of this. This will be a buck, hopefully a buck 85 fill. We're going to try $1.90. All right, I got filled for $1.90. It's not bad. All right, so margin accounts are going to get a little project options edge here. Thanks. Okay. It's going to get these filled up. 7. Okay, $1.90 seems to be filling pretty nicely. So if you're in my project options edge, I'll make this official post. I'm doing a 180 by 170 ratio spread. So I'm buying the 180, selling 2 at the 170 for $1.90. That's the income trade. And then 1. Come on. All right, I'll go down to $1.85 to get this one filled. No problem there. So new trade, project options edge. It's going to be number 107. So that's a 115. Buy 180 put. Sell 170 put. $1.85 to $1.90 credit. Probability of profit on that trade, about 97%. Chance of assignment would be around 6%. So it's a likely income trade, but I'm willing to own. Okay, trades in. Defense trades. Yep. So I kind of threw them in the middle. I'll show you. We're at 68.20 right now. Pending order. Let's see. So we're showing some profit now on daily profit play, which is nice. Defense trades are offering really small credits. This is defense trade to the top side, 69.05. So I'm buying the 69.05, selling 2 at 69.15, and then skipping to so it's a 10 wide and 15 wide. That's a combination for a broken wing butterfly. And anyway, I'll just type it in for defense. It's unlikely going to get filled, but if it is, there's a break even around 69.26. So daily profit play, but defense trades. So SPX 213. So buy 69.05, sell 6915. Buy the 6930.
Chris, you got time for a quick question from the Blakester, real quick?
Yeah, man.
What the heck? Why is my camera not turning on? So my buddy wanted me to ask you. He said, "What type of clues do you look for when you forecast range days?" I think that's a really good question.
Look for Blues Clues, man. Just kidding.
Look for Blues Clues, baby.
No, honestly, the if I'm expecting a range day, it's because of what happened yesterday. It's the market's
Okay.
ability to bounce back. So when we have like a wild, inefficient move, I tend to be a little bit more active, and I wouldn't say aggressive necessarily, but more active is like I expect the market to bounce back and have the resiliency because the market efficiency is based on exactly what I said. The expected move is usually always greater than the actual move. And in the event that it's not, it usually has to get back to efficiency again. So now that we have zero DTE, market makers can't afford to roll that risk and be wrong multiple days in a row. So like Larry said this morning, 3 days out of 8, the reality is it's like 3 days out of like 15. It's like 3 days out of 20. Like we haven't had a lot of inefficient days, but 3 of the last 8 feels a little bit excessive. But you go back to a bigger sample size, you got, 15, 20 days efficient. 3 of them were not. It's just been in this last stretch, like 3 out of 8 is a little bit of a roller coaster ride. So that's why I'm taking the trade that I did today. It's like yesterday was such a not even close to the expected move, right? It was 38, 39 points expected. The market moved over 100 points.
Yeah,
So today it's like they have the market's on high alert. Everyone thinks it's going to be crazy volatile, and so they bank on high expected move, and they just rake in all the premium because we won't actually get to those levels.
that's
So
genius,
that that's
actually.
that's why that's how I can kind of make that decision where it's like, okay, I'm if I'm going to put a house edge for myself, it's that the market makers will probably keep it. The expected move is greater than the actual.
Cool.
That makes
And
sense.
yeah, that does make complete sense. And
Okay.
did you get filled today on daily profit play?
Yeah, we're filled at 15 wide. I did $2.60.
Okay. And profit target, are you looking for like a certain number? We just had Aurora was asking. Did you already
I'm going
answer
to be
that?
greedy. I'm going for a big profit today. I'm going to try to get of that 260. I'm trying to go down to less than 50 cents debit. I want to try to get
Okay.
over 200% trade.
I like it. Well,
Yeah,
thank you, sir.
yeah, man. All right, I put in the defense trade for it's put side 67.40. Put sell 67.30 and 67.15 for $1. Okay. That way the defense doesn't cost me anything. The defense are just pending credits with the butterfly spread. And we are at 40 right now. Take a look at our efficiency levels. I mean, we're pretty much flat for the day. We're probably going to see some pretty quick profit already on our daily profit play, or not. 15 wide, and you can take $15 profit out of it right now. It's crazy. It seems like we've been in this trade for hours. It's been 40 minutes. So just give us some time. If things are looking a little bit more encouraging and I haven't been closed out for the 50-cent debit, I might just let it run to close. That's certainly riskier later in the day. So I'm setting to take profit here at 50 cents. But if we get time on our side, this hopefully works out in our favor. Okay, and then my XSP trades here. I'm going to get these labeled. So here's another one. So this is EGO weekly. So I have a weekly, weekly, weekly. All I need price to do for me to be net positive, I need price to be greater than 684 by Tuesday. If it is, I can win this trade. So if I win and I lose and I lose, I still make money. If I win and I win, then I'm making a lot of money even sacrificing that participation trade. Okay, so we're still looking pretty decent for engineered options. Just a little bit of an effort. If the market just makes an effort to come back at all, we'll be fine. Okay. All right, Blake, I hear a creature stirring in the other room, so I might have to bounce here. My knees are killing me. This floor is not that comfortable.
Yeah, we might be. I'll give you a little. I got a little. There's a little creature stirring in my wife right now. She's been having contractions for the last 8 hours.
Um, Dude, when is the official due date for you guys?
The 16th, so Monday.
Oh my gosh. Okay.
I
Well,
know.
all right.
Yeah,
I'm gonna see if we can here. I'm gonna see if it'll just crawl over here.
because yeah, it's her first Donna, her first one. So she's out there on the couch right now, and she's just on the phone with her mom. Thanks, Matthew. Really appreciate that. It's going to be an interesting time. Thanks, Ernesto. Yeah, but yeah, it is her first.
Dude, if it's a go time very soon, you're in for a wild ride, man. But
I know. Last night I
so,
was
so
laying
dude,
there. I was counting the
whatever happens,
contractions.
like happy mom, happy baby, healthy mom, healthy baby. That's the most important thing. Birth plans go right out the window. We know because we had one, and it was very little of it was what we wanted, except for healthy baby, happy or healthy mom. Like
Yep.
at the
Yep.
end of the day, it's like that's all you can ask for, and that's a good delivery. But it's crazy chaos. Big ups to like everyone that's had kids. You don't appreciate until you go through it.
Mm-hmm.
Yeah.
Oh my gosh, Larry had to fly to the hospital. They were born within 45 minutes.
Wow.
Yeah, that's what Avery's really nervous about,
Yeah.
being
Blake,
in
if
labor.
if you guys are having if it's like this weekend and stuff, are you off for a week or two?
Yeah, at
Okay.
least.
Okay.
I know Deanna is going to be covering for me in the
Yeah.
morning.
Yeah.
So
Okay.
yeah, that David, that's what everyone keeps saying. Grandkids are better, but you got to go through kids first. My parents are elated. They keep sending me pictures of the pack and play in the basement. They're like, "We're ready."
Somebody's asking about DraftKings. I did not get assigned yet. No. So well, 227 expiration of 3334. What's that trade, Gerald? That's not whose trade was that? That's not I did a ratio spread on DraftKings. Mine's out this summer to June. It's a 32 by 30. DraftKings is getting crushed by the poly market stuff. So like all the prediction markets, DKNG, gap lower. Yeah, we'll see. But I've not been assigned yet. I will double check on my other accounts here. They should all still be full ratio spreads. Yeah, there's zero assignments for me. So I have a 32 by 30 ratio spread, pulled in $1.29. That would be break even. So 30 minus 2 minus $1.29. I own the shares at 26.71. If I get the assignment, I'm just going to try to repair it. So we're down to, this is 2024 lows, 2025 lows, 2025 lows. Bear market 2022. That makes me like this trade a little bit less. I don't know how excited I am to own it if it's going to fall another 50%, but let me check something really quickly. Oh, from pinch point. Okay. Go D, K, and G. I mean, price to sales 2 times. I mean, I don't know. I mean, this is encouraging. Yes, like call sheet, poly market, all the prediction markets are kind of eating DraftKings lunch right now. Um, is it true? I don't have any sporting bet apps. Is it true that they ended up removing betting on college sports? I feel like that's insane if they did. But according to this, I mean, fundamentally, actually, it looks pretty strong. I just don't know if I'm going to justify hanging on to it. So we'll see. I mean, if it gets assigned early, then I'll see what I can do to repair it. What is a quick? So if I get assigned somewhere with my expiration in June, I could get a couple of dollars for my break even at 26. I could probably grab a couple of bucks at the 25 or 28 and just repair it. If I just gave it into the end of the year, it doesn't tie up a lot of capital, but let's go end of the year. I mean, I could probably lower my cost basis by $2.50 to $4, repair it, hopefully. Brings my cost basis down to like low 20s. If it just holds there and works higher, I can maybe flip it for like $200 to $500. So some player props, not gamer total. I got you. Defense trade that I type in 14 should be a 15. Oh yeah, sure. Yep, it's 40. Yep, you're right. It's 15. It's 15. Fixing that now. So the 67, 40, 30, and 15. And then the 5, 15, and 30. Those are correct in the Telegram. Okay. All right. So is that, let's take a look at the heat map. Where are we at for today? Chop, chop, chop. Volatile day. It is tempting to look at current price and throw in like an iron fly, but I think we got a pretty good opportunity to grab a full like 250 to 260 credit today and just keep it. Let me see if we go SPX. Take a look at today. I'm just curious what an iron fly looks like if we stay relatively contained. So where did we open today? We opened up around 30. Let me see if I can do something creative here. So if I said 50, I'll do like 15. That's 40 wide. And then maybe 30 wide. So that's 40 wide. I mean, this isn't a bad way to structure the day. I don't know if this is a safe trade, but can you see the risk reward here? So if I set the trade up this way, this is essentially like a modified iron fly, so I can decrease the risk a little bit, but allows me to capture something in between 68.20, 68.40. I have about a 3-to-1 opportunity here. So if we stay like choppy all day, like I part ways with my risk is 475, but I can make up to $1,500 if price is inside of these strikes. So if we finish between like 20 and 40, you're looking at a pretty fat profit drop today. Obviously, if price goes greater than 60 or lower than 6,800, then you're risking 475. But for higher reward than risk. And the nice part about this trade is if you take it, this is not one that I want to sit on all day. So if I took this trade, then I probably want this 35.60 to go down to, let's say, 32, like 32.50. Try to grab $200 to $300. And anytime I do an iron fly, like the 10 to 15%. return of the credit. Because if I get 10% here, that's making about $300, about $320. My max risk is 475, 490. So it's a decent return. But do I love that trade? Not enough to take it when I think we have a pretty safe like 260 today. But there's just a lot of space again between like 6,800 and 6,910. There's a lot of space. So I think price is just going to be flowing around in here for the day. Expected move, greater than the actual, and hopefully things just look better for us as time passes. So looking better, up about 50 bucks, with hopefully closing in on $200+ today. Blake, if we are ready, let's go ahead and fire up a little live stream here.
Let me see what we have today. I think it's waterfall.
Okay. I did waterfall yesterday in closing playbook. I mean, I think waterfall is a fantastic strategy for everything that we are in right now, which is just a choppy, nasty, ugly, indecisive market. So this waterfall trade is going to be full profit next Friday. We've been filled here. I mean, all of our waterfall trades are looking pretty good. That one's showing full profit for next week. This one's already up about 30%. Built out all these strategy twos. I mean, so, and the expirations on these, I'm going out to May. I'm trying to avoid whatever this like weakness window is from February, March, April. I'm trying to avoid it. So my expiration would be, if the markets are going to fall, let's say that we fall. So I'll just kind of say that this is the trajectory of price, that we break some lows and we work our way down. So let's say we go down here, lower high, lower low. Okay. And then worst case scenario, lower high, lower low. Now, each week we participate, you'd still be meeting with me on Mondays or next week on Tuesday. We'll still look at a trade. We have another opportunity, another opportunity, another opportunity, another opportunity. And we just keep participating. Even if the market's falling, we still participate. Now, if this market is done and over with this correction and we start to head back up, okay, we're still going to participate week after week. And all of these trades that I just highlighted in the first stretch, all these trades from here, as long as I can put enough time in the trade to let price recover, then these are all winners, which is why I'm avoiding this February, March, April window. Because if we're about to roll over for a 30, 60, 90-day drawdown, I'm trying to get this market recovering back up. And every one of these trades, by the way, we started out, my threatened levels are all the way down here like 6,200. Correct me if I'm wrong, if somebody's in my waterfall income class, we don't really have any risk. I think our risk is like 6,300 and lower. I'll check my strikes. But we have this one. I mean, price would have to fall by next Friday all the way to 5,800, which is not going to happen. 99.9%. This one, 57.75. This one is 60. Okay, so we have a 64.40. That must have been around the I think that was around the 200-day moving average. That's out to May. We have this one at 62.50, 62.40, 62.60. So I have one trade at the 64. That was a build a trade I did with Nate and Kane. I think that was about a 7 to 8% buffer, and I was using the 200-day moving average. So long story short is we do these trades. This is my strategy too, and we give ourselves room for error on every single trade and every single week. And all these trades have profit traps of up to $1,000, sometimes even $1,500. So I would be risking, if I risk 450, I risk 450 to make one. I'll say risk 450 to make 50, but also have a $10 to $15 profit trap. So if we land a profit trap as we get near to expiration, we can make 2 to 3 times our risk in these trades. So I do really, really love the strategy. And I've been cautiously bullish going into this year, and for good reason. We still see the market as indecisive. The market just refuses to want to climb above 7,000, which makes me think that if this is distribution, that the market's going to start rolling over a little bit. Now, we don't know yet. It hasn't broken any structure. I can't get ahead of myself and say we got to be bearish. We don't have to be bearish. Okay. But if it rolls over, my risk is down here around 63 to 62, and it has to stay down here. If it rolls down here, finds support, goes back to these highs again, all those trades are going to win. Okay. Samir says, what happens if it's long term? Well, define long term. I mean, we'd have to see the market go down and stay down for the duration of our trade. Okay. So, I mean, the market, has it ever gone in a straight line? I see what you're saying, but you're saying 18 months. Show me what an 18-month bear market looks like. It's not going to do this. 18 months is not this, right? Even 2008, the market was up to some highs, down, 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 down. It had waves, right? So our durations of like 40, 60, 90 days, we have profit traps. We manage. I mean, it's not easy, right? But you're not going to get stuck in like this perma bear market. I mean, basically, if the market has any reflexivity in like a 60-day window or 90-day window, you've got a chance to survive with some profit traps and just keep trading. And all the while, when the market is going down, I mean, what you're asking for is if the market goes into a 56% correction from top to bottom, it's going to be a tough environment. It's that simple. So if we're really that confident the market's going to be bearish, then we flip it around, we sell the market. We can sell the market, but I don't think we're going into a permanent bear market. Not by a long shot. I think there's so much support like baked into this market. There's so much to kind of keep this thing propped up and financialized and gamified and securitized. Like it's still lots and lots of buying interest. I mean, even this year, right? The deleveraging in tech hasn't stopped the market from putting money into the boring stuff, consumer staples, energy, materials, industrials, the build out of AI. That's been the big rotation this year. One thing we look at is S5FI. Yep, look at this. Okay, our market breadth is still run of the mill. So we have 61% of stocks above the 50-day moving average. We still have 65% of stocks above a 200-day moving average. Like market breadth is still somewhat healthy and holding a bull market. Credit spreads are still very tight, liquidity wise. There's no rattling in the bond market. Yields aren't really going haywire. Like under the surface, like there's still a lot of stability in the market. And there are sectors that are leading the way aggressively this year. XLE is one of the big ones, and Staples was like the most beat up sector last year, and it's killing it this year. So this is XLE, like just off to a fantastic start. And usually when we see sectors off to the races like this, they tend to stay in the lead. And if there's any, catch up elsewhere, then they tend to still perform pretty well. P would be your staples. Again, beat up sector last year, it's up screaming to the lead this year. It's up 17%. So some sectors are performing well. On staples, you also get a dividend of 2.4. So that's a nice little kicker. You got a 17% move in price appreciation plus a 2.4% kicker. I mean, that looks like you could have a 20% year in staples. Iron condor, iron fly, the same? No. Good question. Iron. So I'll type them out on the screen here. An iron condor. Let's say we'll say price is 6,900. Okay, iron condor. We would do a sell 6950 call. And buy, let's say, a 6955 call. And you pair that with sell 6850 put, 6845 put. And that'd be 5 wide. So if I get $1 credit, I'm risking $4. That's an iron condor. Iron fly would be price of 6,900. So I sell the 6,900. Call, and I would buy, let's say, the 60 and this is like really wide, but if we did 69.50 and then I sell the 6,900 put and I buy the 68.50, this is going to be a much higher credit. Let's find out what it would be actually. 50 wide is probably going to offer like maybe $30 to $35. Let me see. So let's go 55, 55. Let's just go 50. Let's go 50 wide. I'm just curious. Plus or minus 45. Let's just do the entire expected move. So if I buy the 69, buy the 68, yeah. So I can get about $3,400 on the trade. I'm risking 1,500 to make. I'll just round it to 35. So $35 credit and risk would be 15. So you can see that an iron condor is allowing you to take on way less risk. You set the width at 5, you can, risk maximum. Like if I took this trade for 50 cents, I'm risking 450. So much better defined risk, and you're also way out of the money. So you're not going with current price. You're way above price on your call side. You're way below price on your put side. You can define risk a lot better in an iron condor. Iron fly is great because you can pull up so much premium up front. But if you go wider, so if I sell the 69, sell the 6900s on the call and the puts, if I went 50 wide and took on the entire expected move, the nice part is I still get a trade that's over 2 to 1. Like iron flies are great, but what do you need for that trade? You need the market to stay inside of that window. And if I get this is the deceiving part about an iron fly. Okay. Everyone thinks in an iron fly, it's like, well, if I'm below 69.50 or I'm above 68.50, I make money. Not necessarily, because I only got $35 credit. So my break-even price on this trade, okay, the break-even price is 6,935, and it's 6,865. Does that make sense? Because if price is 3.5, I mean, let me build this out. Because if I get $35 credit, if we go beyond my credit, I'm taking on risk. Now the full risk, the full $1,500 is if we're beyond the entire 69.50. There's no assignment risk. This is SPX. There's no assignment risk if you're trading SPX. No assignment risk if you're taking XSP trades. Never assignment risk. Okay. So this is an example on, SPX. There's no assignment risk. If you like I do love iron butterflies, but I wouldn't love taking the trade for that type of risk, when instead this might be an alternative. If we ever want to incorporate some iron flies here in this session, going into XSP, I think today is a pretty good day to do it. So just an example, like we sell the 86 and the broker gives us about a $4 expected move. We can go, I don't know how much we're going to get for. So the broker right now, it's 407s expected, and we can get 450, 460 on the that'd be a short straddle, but I'm not going to do that on XSP because that's crazy buy power. So if I did, let's say a 90, let's just go 10 wide to make this easy math. So 76 to 86 and 86 to 96. Okay, so I can get $4.40. Now, if I do this on XSP, what's interesting is look at my reward to risk. If I tighten this up and I only go 5 wide, let's go 91 here and 81 here. Now you can see that I have about a 2 to 1 on this trade. I have about a 2 to 1. Now my break even would be on the call side 689 and change, and then 682 and change. So if we're above 683 or below 689, I can make money on this trade. My maximum risk is $165. If we stay right around 686, then the iron fly is a trap. Okay, the iron fly, there's my risk. Okay, there's my trap, and I can only risk a dollar, let's say $1.67. That's my risk, but my reward could be about 2x, so I can make $3.30 on the trade. So I have about a 2 to 1 opportunity here if price cooperates. What's the ETF in international markets that made? There's a bunch of them, Ben Cat. Trying to think. Uh, International markets, SCHY wasn't a bad one. SCHY has like 200 instruments. Yeah, but Jose, you don't have to choose an iron fly. You can just build it. You just build the trade. Like you sell your bid, buy your ask, build the trade out. It's a custom trade. Okay. Yeah, we'll see. Those would have been last year. There would have been AFK. So that would have been Africa. AFK last year was up a lot. So we go year to date. Some of these are pretty crazy last year. So Africa, this is last year's candle for Africa. It was up. There's 70%. 70% on Africa. EWZ is Brazil. I think that was up over 40%. EWZ, there is about a 44% winner on Brazil. ILF is Latin America. Also had a pretty good year. Latin America was up 45%. You can go FEZ, which is like trading the DAX for the Eurozone. Oops, FEZ. So this is Euro stocks. Also had a pretty good year. I think this is over 25 or 30%. There's 33.5% for the Eurozone. What else? FXI for China. I don't know if this did as well, but I'm pretty sure it beat the US. Last year, FXI up about 27%. Argentina. It's this one, yeah, the ARGT. It wasn't 2025 that it had a great year. It was 2024. 2024 was insane. It was up 62%. Last year it had a lot of volatility, but still came back nicely. Finished about 10% higher. That was chop. But again, the gain here is like you had a just ridiculous run in Argentina. Argentina is up 650% since COVID. Again, you're not getting crazy liquidity. You're not getting a lot of options. It's just, the non-US trade. Even EWJ, which is Japan, this one didn't have a bad year either. Japan is cranking this year, and Japan last year was up 20%. And this year it's already out to a pretty good start, up 14, almost 15%. So a lot of decent performance non-US, and it likely continues. But I keep saying this: the world is not going to just rip higher without the US being stable. The US has to be pretty stable, pretty liquid, pretty consistent, and the world might be able to outperform it. But if the US goes down, we will drag the whole world with us. So I think that US Japan especially, this means a lot of liquidity, a lot of debt is in yen and in dollars. As long as these economies are cranking or showing resiliency, then I think the world can do pretty well. Okay. All right. Yeah, it would have been SCHY. SCHY is a Schwab one. It has about 200. So this one has like 200. Oops. Let's go back to SPX. It has like 200 instruments for SCHY. There. That was last year's SCHY. So the world did pretty well. This was up around 29%. Okay. CLJ. The VIP trades, it's just a profit target on VIP trades. There's a video inside your classroom. If you go to Waterfall Income VIP classroom, there's a VIP masterclass only, and it walks you through like the profit targets for VIP members, and also walks you through the bonus trading, which is the max profit training, the advanced trade management, and the tidal wave strategy. There's a 90-minute video inside your VIP classroom. So the trade tracker is the same trade tracker. I'm not tracking two different ones. The VIPs just know if you want to go for the bigger profit target, go for the bigger profit target. Okay. And that's based on a strategy one. So we have I don't have any strategy ones running because I've been cautiously bullish. So I'm doing strategy two. In strategy two, I put those trades out with like a 5% buffer, 10% buffer, 15% buffer. So I'm holding those a lot closer to expiration so that profit trap has a chance. Okay. All right. All right, Blake, let's go ahead and fire up. I don't know if it's waterfall today. It should be waterfall today. And then just some news on my end. Let's check our daily profit play for the day. Got some exciting stuff for pinch point. It's been a minute since I've highlighted pinch point. I've been in the background working on a couple of updates for it, some filters, some trade management features, some ability to scan and have not just one trade on pinch point, but also like spreads and take profits. So 30, 40, 50% take profits like we've been doing in the pinch point scanner service. I'm going to build that into the scanner. I'm also looking at a way to add additional liquidity because, we've had 9,000 plus stocks scanned on the pinch point. If you want to just focus on the top 100, you can filter it, just go top 100. That way your scans would be running for, pinch point on SPY, pinch point on Qs, pinch point on the top 100 stocks. So very liquid, super optionable, get in, get out for pennies, pennies different versus having some of those trades where I can't get my trade to exit. It takes a lot longer to hit that 50% take profit like I like. So anyway, those updates, I'll have a rough version of that next week. So if I can get like a internal version of it, I will show it a little bit next week, so we can have some on there. But I look forward to getting back up and running with some more pinch point sessions. I've just been working on this for the last month or so. Okay, all right, good stuff. And then today, hopefully, we are in good shape to see the markets be efficient today. We just need to stay inside the blue lines. Inside the blue lines is great. Inside our green lines is our trade. So this could be a overall pretty good day. I will be watching to manage. I mean, I'm not looking to be super greedy. It's like, could I go after 50% take profit today? Sure. Because I do expect the expected to be better. I expect that's redundant, but I think that the expected move will be greater than the actual today. And therefore, I'm going to try to exploit a little bit more profit out of today's daily profit play. So if we can pull, 200, 210, 220 out of that max 260, that's pretty good. Don't forget to put GTC. Correct. Yeah. I mean, GTC. So good to canceled on engineering options. That way, when we put the trades in on, Mondays and they get filled, like we've been filled on participation, break even, and defense this week in engineering options. All I need price to do by Tuesday is stay above 684, which right now it's above. So if it just holds here for Tuesday, we're actually going to make money. We'll lose two trades, lose two trades, win one trade, and make money. Like, I'm not saying that's fun, but I'd rather make money.
Better than losing.
Than lose, for sure. So we'll worry about that one on Tuesday next week. Okay. So more to manage. If we have waterfall, Blake, let's go ahead and fire that up for everyone that's here. And Blake, hey man, just send me a text, dude. If you guys are heading to the hospital and stuff, send me a text. But
yeah, I'll let you know.
I know due date is anytime.
Yeah, we were at the doctor on Wednesday, and she checked her and she's like, oh yeah, she's like, it's soon. She's like, I'll probably see you this weekend. Like she's just already planning on it. So
yep, fair enough. Yeah. All right, man. Well, keep me posted. Class on Monday, yes. Even though it's President's Day, I'll still be live. Even if it's just like market prep for the week, we'll have a session. We'll be together on Monday, same time, same place. There's no market to trade, but we can talk shop. We can do some strategy sessions. We'll do a little bonus class. So anyway, come to class on Monday if you want. Markets are closed, but we have time to just plan and prepare and talk some strategy. So and hopefully Blake's delivering a baby.
Yeah. Who knows, man? It's time will tell right now at this point. So
yep. Okay, cool. All right, everybody. Check this out for the live stream for Waterfall Income, and we'll see you soon.
All right. See you soon, guys. Here we go.
543 trades. Results, 97.1% win rate, 17% average return on winners and losers with an average hold time of 11 days. Every weekly windfall targets roughly $1,000 in income based on a 5K risk in every example we talked about today. Again, it's important you understand, like, yes, we're talking about $5,000 examples. Okay, you're getting about 15 to 20% return on that risk. You can scale that down, scale that up. You don't need $5,000 to take these trades. Today's risk that I took on, $450 risk, is the maximum risk for me. Okay, and that trade could pay me up to over $1,500 in profit. So anyway, we'll talk about that in the classes. So from September of 2024 to current, so this is an update. We should have 126 winners because we did have a trade close out at the 130 expiration, which would have been last Friday. The 124 live trades. So I'm pretty sure we have 126 live trades, live winners at a 94+% win rate. 16% average return. That includes winners and losers with the average hold time of 12 days. Again, we cannot guarantee any specific future results. There's always risk in trading. You know that. You trade, you sign the disclaimers, all that good stuff. If you want to check out terms, conditions, disclaimers, check it out on our Prosperity Pub homepage for more information. All right, final thoughts here. We get this. It is trading. Trading is a game of winners and losers. My goal is to win more than I lose. My goal is to win bigger than I lose, and I make money. So when we take losers, we understand there's no black box miracle system that prints out winning trades automatically. The whole purpose of my trading, the whole purpose of my research and working with traders just like you is to give us an edge in the markets. If you are not comfortable placing trades and potentially taking on risk and losing a trade, then you need to take a demo account. You need to be paper trading. You shouldn't be trading with real capital. This is risk capital. So losses will happen. I just want you to make sure you understand that. But when we're winning 94% of our trades, we don't lose very often. So we trade with a lot of confidence. All right. Appreciate everyone being here today. My name is Chris Pulver, and thank you for joining. With nearly 30 years market experience, I hope I don't look that old, but I've been in the markets for 26 years now. Trade everything: stocks, options, futures, forex, cryptos. More than 10,000 hours spent trading and teaching. I've been doing this for a long time. I've certainly seen a thing or two. What did we see this last week? One of the biggest single day moves ever in gold and silver. What did we see last year? One of the biggest single sell off peak to troughs and one of the nastiest volatility swings. We've seen COVID and bear markets and bull markets. Right? What's happened the last few months has been pretty alarming. So I think this is where the gold and silver mania started to happen. Governments around the world have become pretty reckless. So this happened, late last year. China's printing 5 trillion yuan, and they're basically doing it to prop up the real estate market and also backstop their stock markets. At the same time, the Eurozone coming out of nowhere to finally do some fiscal spending, and they put together a $1.1 trillion spending package on defense. They're also reliant on energy sources from Russia, which is also a huge plaguing thing for the Eurozone. And meanwhile, good old US of A. Government debt is skyrocketing with no signs of slowing down. We have a partial shutdown right now. We had the longest shutdown in history last year. The government just continues to spend money. If we have the Supreme Court rule that tariffs are unconstitutional, well, there's another $500 to $600 billion that we're going to have to come up and make up for, or just keep spending and run our deficits even hotter. So point is, does this lead to an inevitable outcome? Second wave of inflation? Possibly. Nobody wants to experience this. I certainly don't want to see this day to day. I don't want to see the loss of our dollar purchasing power. And this second wave, I think after dealing with this persistently since 2020, when everyone had this on, everything's more expensive now. Everything in life is more expensive. If we go up again, and we potentially have a mild hyperinflation, it's not going to be pretty. It's not going to be fun. So if you care about your family's financial future, and I know you all do, as do I, then I urge you to pay close attention. Because not only is this new income technique